Today we have a special guest, Mr. Dale Willms. What part of the country are you from, Dale?
I'm in Minneapolis.
Minneapolis, Minnesota. Awesome. I haven't talked to many people from Minneapolis, but I guess it's the first.
Now you get a treat.
Now we get a treat. Have you ever seen the show Fargo by chance?
Yeah. Yes. Yeah. Unfortunately, there's a lot of accuracy to that in the wintertime.
Okay. I didn't, my wife always likes the Fargo accents from almost like Canadian. And it's so funny.
Yeah, when you drive further north, you hear a lot more of the accents. The cold that they depicted, yeah, that's just reality every day in the wintertime. The accents, you do have to get a little bit further north, and it is a little bit humorous. You don't hear it as much in the Twin Cities.
That's funny. That's quite hilarious. So can you give somebody like a 30-second elevator pitch? I know you have it ready. So 30-second elevator pitch and who you are, what you do, and we can jump right into it.
Yeah, so we have a company, Centra Companies. We do anything that's real estate related. We got a real estate equity fund. We've got a home building company, land development company. We do some apartments, small commercial. If it's real estate, we do it. We love it. I also have a small cattle operation, which is just I do for entertainment because I love animals, and 6 kids, wife, grew up in California, and just keep moving a little bit further east. We spent some time in Nevada, Utah, and now Minnesota.
See, I did the opposite. See, I started in Chicago, and then I went south to Atlanta, and then I went west to California. So next time I go to Seattle just for jokes and giggles.
Yeah, that's what I'm wondering if I'll end up in New York next.
Yeah. After I've moved so many times, I'm just like, I can live anywhere I want at this point, you know? And once you left home, it kind of makes it easier.
It's kind of the beauty of living today. 25 years ago, I couldn't imagine just living wherever you want based on your business. Now today, it's, with the technology we have and airplanes, just go.
That's it. So how long have you been in real estate?
I've been in it in some form most of my life. I did construction at a young age, then worked in banking that we did construction development, mortgage lending, worked for a company that we created a city from scratch, spent a little bit of time outside of real estate and did some retail, was involved in some Radio Shack franchises, then had a home building company, then worked for a national company, and then went back to work for myself again.
That is a name I have not heard in a very long time.
Yeah.
Radio Shack.
Yeah. It was a lot of fun, and I'm glad it's in the rearview mirror.
Oh, man, Radio Shack. That's funny. But, okay, so you've done quite a bit of things. How do you position yourself to the next thing? Because I think a lot of real estate people, they get stuck in a single line rut that I'm just going to flip houses forever, and it's kind of what they do. But you like mortgage lending, you're flipping, you're developing, you're now messing with cattle. What's your mindset on doing all these things to diversify, or is it just for fun?
Yeah, I think it's a really good point. That's really an important one. I think that anybody that's in business, I've got a friend, Keith Cunningham. He's written several really great business books. And, one of the things he says is the biggest problem for entrepreneurs is not lack of deals. It's indigestion from having too many deals, which I think is a really good point. So you have to be really careful. We're involved in a lot of different things. And if you're not careful, you get involved in too many things and then nothing becomes important. And, so, I'm involved in cattle because I love it. I live on the farm that we have and we raise the cattle here and it's fun. But, for the most part, we're related to real estate and we try to build a business that has some stability and some great leadership before we jump into that next one. Otherwise, if you're just doing a mediocre job at flipping houses and a mediocre job at building apartments and a mediocre job at developing, you just are mediocre at a whole bunch of stuff versus really become excellent at flipping houses. And for a lot of people, flipping houses then turns into, well, now I'm going to flip apartments or I'm going to build an apartment complex, so we can mature in that as well. I do caution people, don't be too quick to diversify too quickly and in too many things.
Yeah, it's a really good point. We've kind of diversified into things out of necessity, not necessarily because we wanted to. It was just out of necessity. So we got into land flipping. When you do land flipping, you get into seller financing and notes, and you kind of, once you do that for a while, you get into development because you development opportunities come across. So it kind of grows as you grow, but it was never the intention to do all the things all at once.
But I think what you said is right to that point. You've matured in your experiences and you've said, oh, okay, hey, we've learned, we've had this experience. Let's move into this next phase that natural progression that you talked about. I think it's fantastic.
Yeah. So how many, you said you mentioned a couple companies. How many employees do you have across all your companies?
We run pretty lean. I think right now we're around 25.
Oh, wow. That is lean. That's very lean.
We hire out, we contract out a lot of work, as much as we can. We do as little as possible in-house, and utilize outside talent.
Is there a specific reason for that? You'd rather hold the contractor accountable versus an in-house team? Or what's the methodology for that?
Yeah, I mean, part of it is what the margins are. Focus where the margins are the greatest, where you're going to get the greatest return. And HR, there's a lot going on, a lot of moving parts, a lot of risk with HR. And it's harder to control as your business ebbs and flows. What do you do when you have those employees? And so I think it's pretty easy in real estate to get really laser focused, hire the best of the best to do those things. So we don't do any architecture work in-house. We don't do any development work in-house. Hire those people that are really good at their craft and let them do it. And it's okay to let them make a little bit of money. But there's Ben Hardy wrote a book. It's called Who Not How. And I love the principle. And the whole principle is stop worrying about how you're going to get something done and worry about who you're going to help get something done. And in business, we really focus on that. How do we get it done versus who's going to do it? Yeah,
absolutely. How do you keep an eye out for talent?
Yeah, that's probably the hardest thing we deal with is having top talent. We have 2 people we've hired just within the last year that it's like, they're really good. I really like them. And said, why didn't you come on board? And they said, what am I going to do? I said, I have no idea.
Yeah.
I don't know what you're going to do. And we're going to find something. And both of them, it was a pretty big leap of faith to say, yeah, I'm going to join your team when I have no idea what my job description is. And both of them now have one of them is the president of Centra Companies. The other one's the president of Centra Capital Partners, which is a real estate equity fund. And so they're both pretty key people. And in both cases, I said, I really like you. I think you're really smart. Join our team and we'll find a spot for you later. And in one of the cases, it took us 4 or 5 months to figure out exactly what we wanted to do. The other one, it happened a little bit faster. So for us, it's always be looking for really good talent. And you'll always find an opportunity to place that talent if you bring them on your team. And, you got to be a little bit, your business has to have some experience and some time behind them, before you can do that. That's harder to do when you're first going. But, in time, it's served us really well.
It's funny you say that because we just did that recently with a guy. I was like, he was available, so we hired him, but we're like, I don't even know what we're going to do with you yet, but we're working on a place for you. So I've been brainstorming of different best suited positions for him based off of his knowledge and skill set. And it's one of those things where you have to bring on those people even when you're not ready to, just because you have to catch them. Because if you miss them, they're out to the next.
Yeah, and if they're really good, they're going to provide value to the company. Absolutely. Sometimes you just don't know what that value is when you first start out.
Absolutely. No, that's a great point. That's a great point. So they ended up being 2 managers for different businesses. Well, I think that's a really good foresight to at least catch them.
Yeah. Because that's hard. There's a lot of average talent out there, but I want to be surrounded by people way smarter than me.
So I saw something yesterday that I think kind of alludes to this. Let me pull it up. It says, as a tweet, it says, emphasis on exits is weird. Build something awesome you want a piece of indefinitely.
Yeah.
Are you offering these people equity?
We actually, about 2 years ago, I'm trying to figure out, in the United States, a really cool thing is, if you're in real estate, it's the ultimate tax advantage. Yep. Congress has created the tax code to incentivize us to invest where they want. And they clearly want us to invest in real estate. When you're in real estate, you get all these tax advantages. One of the benefits we provide our employees is they can buy houses periodically at cost.
Yeah.
And so we have employees that'll buy them and turn them into rentals. And it's fantastic. And a couple of years ago, I'm talking to one of them. Well, he doesn't get the same tax advantages because he's W-2. He doesn't get the same tax advantages I get. It's
Yep.
like, this is terrible. How do I help them build wealth? Well, in time, we ended up creating this real estate equity fund that people can invest alongside with us, that we can invest that money. And so we've created that with now, not only can anybody in the public can invest alongside us to build wealth, but the original intent was our employees, we have bonuses that we can give, and we can also do it through a simple IRA that we offer, that with the goal being is they could invest into that fund pre-tax funds, and now they're investing right into the same investments we have. And then eventually when they take the returns, that's when they have to pay taxes. But now we can compound that return much faster because it's pre-tax money that we put in. And, in our industry, it's a little bit harder to give equity in the business because most of our equity is in assets, not necessarily the business itself. And so that was the mechanism that we found that we could give people equity in the business without it being the business, because the business doesn't have much value without the real estate assets, which we hold in special purpose entities. So it's working pretty well. It's very new that what we're doing, allowing them to do it, but we like the direction so far.
Yeah. We deal a lot with notes, like real estate notes and mortgages. So that's one thing we're thinking about creatively, is giving them positions in that through a partial. But it's a way to not even give them W-2 income. It's more of it's a different form of income in general.
Yeah.
Your notes.
I mean, the idea is, how do we help everyone around us build wealth right with us?
Absolutely. What was like a pivot point where what's your favorite business? Let me ask you this, because you run multiple things. You got to have a favorite one.
I would say, I don't know if it's a favorite business as much as it's a favorite task.
Okay.
One of the guiding principles in our company is we improve everything we touch.
Okay.
And that really is true for me. We own a home building company. I've never lived in a new house in my life. The house I'm in right now was built in 1937, and we totally rehabbed it because I just find that fun, turning something better than what we had. And so, for me, it's the challenge of creating something and improving on it. So whether it's we're developing a piece of land that we're, used to have a school on it that was abandoned, or, whether it's building a new company that we could say, all right, you can invest with us and build wealth. So it's anything that we're creating and building, and as soon as I get bored, that's when I get in trouble. So we've got to be building and improving it, or I get bored pretty easy.
Yeah. That's always a problem.
Yeah. And then when I get bored, everybody's in trouble, because then I'm coming in with new ideas.
Yeah, absolutely. I think leaving something better than what you received it at is it's powerful, but it shows the intention of doing great things. That most people are just. I think it's the consumer versus creator mindset. Is everybody 90% of the population just wants to consume everything around them and consume all the resources, and then there's people out there that just create, and there's more internal pleasure from creating than consuming.
Yeah. And you touched on this earlier. One of it is we look at everything as though it's a long-term investment for us. Whether we're rehabbing an apartment complex, we're building a new building, whether it's, people that we're working with, we're looking at a long-term investment. We had a couple apartments complexes that somebody reached out and said, hey, would you be interested in selling them? I said, well, we hadn't thought about it, but we could look at it. So we went and toured the apartment complexes. We didn't prep them. We didn't clean them up to get ready to show them. And, they're Class C apartments, it's for affordable housing. And we're walking through, and, they're asking about things we did. We had totally rehabbed it. And they said, well, why'd you put such nice windows in? Or why'd you do such nice decks for a Class C? And I said, well, the intent was I might hold these for another 30 years, and I don't want to have to hassle with decks that weren't done right. And they said, well, you don't get as much a return. I said, well, yeah, but we improve everything we touch. So right or wrong, that's we look at everything as a longer term investment.
You said you have a fund. How big is the fund right now, and what's its intention with its use of the funds?
The original intention was to help all of our team members to build wealth alongside us. And then that evolved into, why don't we just open it up that anybody that wants to build wealth can do it with us? And so we're early on. We've only launched it a couple of months ago. Unlike a lot of funds, our initial steps, a lot of funds will say, all right, this is a $30 million, $50 million fund. We'll invest in a diverse assets. We decided it would be a project-specific investment initially, and we're doing it with projects we already own. So, example, we have a project that we're doing phase 2. It had about 89 homes. Phase 2 is about 40. And so people can invest in those 40 lots. We already own the land. We're developing the land. Somebody can invest in that, and then they get a return on their investment on the houses that we're actually selling in there. Right now, due to what we're seeing in the market, most of our energy is in new for sale housing. We're waiting to see a few things pivot before we jump back into the apartment game or some of the other development plays. And so all the investments right now are for sale housing, and they can invest in a specific project.
What is this in Minnesota, or what states are you investing in?
Currently, everything we're offering is in Minnesota. We're predominantly in Minnesota, but we are working on. We've got some roots now in Utah. We've got some down in the LA area and other locations that we're going to slowly start branching into those other markets to be able to diversify the portfolio as well.
I gotcha. So new construction builds. What's your takedown schedule for stuff like that? Like what's the entitlements take for stuff in Minnesota?
It really depends on the project. We had one that we were about 8-9 months, incredibly fast.
That's good.
We had another one that, I think we were about 6 years. There was a lot of complex things. Now, in contrast, you look at California, 6 years is rocket fast.
Yeah, absolutely. Yeah, I talked to a lady in California. She was entitling like 10 acres, and she held it for 3 years, and she just got approvals. Now she's starting to build like on her year 4. I'm like, that is a long time to wait to produce anything.
I've got a good friend who bought a project in Northern California. He bought it in 2010, and last year they started developing it. So it was a 13-year entitlement process, which is just nuts.
He's probably making a killing now because I'm sure his prices from then to now have been astronomical. So he's still doing all right.
Yeah, it's hard to say. I don't know, because you got to look at, you buy this asset and now you're sitting on that money and it's not giving you any kind of a return. So if you compound that return over a 13-year period.
That's true.
So, I've asked him that and he's like, I don't think I want to do the math, and no.
He's like, I plead the fifth.
Yeah, exactly.
I plead the fifth. I think a lot of people, they have this bias of producing, like us as like operators, you want to protect and produce ROI, but sometimes things are out of your control that happen and you have to deal with the ramifications of that. How do you handle like internal biases like that? Because I've seen a lot of people online recently get slandered for different reasons, and it's producing subpar returns. But I think with market conditions shifting, and you always have to adapt and do the best you can. How do you deal with that internally?
One of the things we do is we have a little exercise, what's the best and what's the worst case scenario. And so we'll look at any asset and say, we'll often take the room, and if there's 4 people, I'll say, all right, you 2 need to argue in favor and you 2 need to argue against buying this asset. And then we'll switch. And if you can't come up with a good argument as to why you shouldn't do an investment, well, there's the answer right there. It's absolutely no, because there's risk in everything you do. And if you're not seeing the risk, there's a big problem. And then obviously, if you don't see the upside, then that's an equal problem. And so, you need to be able to see what's the downside, what's the upside. Once we've established that, then we say, okay, this is the upside, this is the downside. And is the upside, could we live with the downside for the potential of the upside? And if the answer is no, you don't do the deal. We don't look at, you see so often people will say, well, okay, we've got this inflation, so I'm going to do this deal based on inflation continuing at this pace for the next 3 years. Or I'm going to do the deal based on what I think interest rates are going to be. And we just do deals on what are we dealing with today? What's the upside? What's the downside? And can we live with that downside? And if we can't, you pass on it. There's a lot of deals we've passed on over the years that I regret and go, man, I wish I would have done it. But some of the best deals we've ever done are the deals we never did. Because there's a lot of deals we passed on that I look back and go, I'm very grateful we didn't do that deal.
And And it comes back to your methodology and experience to kind of discern what that is. How do you translate that to your investors on the buy side as far as your experience? Do you kind of show them to the exercise what you're going to buy and what you're not going to buy?
Yeah, we've got a pretty lengthy pro forma that we share with investors. That really shows us modeling it out. What is the likely scenario? What is the positive scenario? And what's the negative scenario? And then that gives an investor the opportunity to say, can I live with this worst case scenario? And never do your investment based on our best case scenario. That's just something we all give high fives at the end if that happens, but never invest because of that.
How do you feel about the future of the current market because of interest rates and inflation and possibly World War III? How's that affecting your decision making currently?
Yeah, we're in a really, really tough market. If you look at the history of real estate, housing and construction are first in and first out of every recession in the history of keeping this data. And so if you look at that, you say, okay, we're short 7.2 million houses in the United States right now. That's how many homes we need to build to be able to keep up with demand. Whether it's houses, apartments, but residences, we're short 7.2 million. Well, the challenge is right now is if people aren't building that because of inflation. The commodity prices are such. And so I'm competing with somebody that's got an apartment complex down the street at 3% interest rate, and I'm having to go get it at 7%. Not to mention all my commodity prices have gone up. And so if interest rates drop, what's going to happen to our economy is all of a sudden we're going to take off like a rocket again because interest rates are down. And so now I can afford to build my apartment complex. I can afford to buy that next house I want to buy. Well, if that happens, then all of a sudden we're going to see inflation skyrocket again. And so we're in this terrible cycle. And it's going to take one of two things to get us out of this cycle. Time, which you look back in the late 60s, interest rates were relatively low, and all of a sudden they jump. And so people in the early 70s are saying, hey, I'm going to wait until the market stabilizes. Well, guess what? That was 1993 before that happened. So they sit on the sidelines for over 20 years while people are building wealth, because plenty of people built wealth in the 70s and 80s. They sat on the sidelines waiting. And so we have a similar scenario of some of the decisions that we made collectively as a society took, a decade and a half to be able to recover from. And we're in that similar situation. We now need to have wages catch up to inflation. We now need to have all of these things stabilize. But if we start building those 7.2 million houses at an accelerated pace, we're going to see inflation go up. So we're in a really tough situation. The other way we resolve it is a massive recession, which I don't think any of us want to see that. But, if we see unemployment rate going to double digits, well, that's going to correct inflation, and we're going to see a negative inflation all of a sudden, which isn't healthy either. So I think it's going to take some time to dig ourselves back out of this. And with that being said, for everybody that's listening that's in real estate, there's plenty of deals to go out. Still go do deals.
Absolutely.
Just go find deals that make sense.
Absolutely. No, there's plenty of deals out there. I know this is kind of maybe off topic, but it kind of alludes to this. But are you familiar with the dollar being dropped by Saudi Arabia this last week?
No, I'm not. No, tell more.
Okay, well the dollar's been traded. The dollar has been traded for oil pricing in Saudi Arabia with I forget what it's called, but they've been trading on the dollar for the last 20 years, and they just switched to trade in whatever dollar people want to buy from, whether it's rubles, yen, or the dollar itself. So they're kind of opening up that thing. So the dollar, there's a dollar devaluation happening because oil is being traded in other currencies now.
Oh, that's interesting. Yeah, that could have a huge impact on us.
So I don't know if you know anything about that.
No, that's interesting. That's worth all of us taking note of.
Yeah, it's just like there's I talked to a person way smarter than me, and they said that the dollars, the number one product of the United States is its U.S. dollar, and that's how we control the world is through the U.S. dollar. And it's no longer backed by gold; it's backed by the military.
Oh yeah.
So
it kind of makes sense.
it's an interesting dynamic that we face as Americans, that you always have to look at what's going on in the world, because it does affect us,
Yeah.
micro and macroly.
Yeah.
So I don't know. Like I said, different questioning, but I don't know if you know anything about it. And
No,
in your
now you got to get an expert on that on the show so we can all learn more.
hey,
It's an interesting thing.
This is one of the things where, like I said, this is one thing about podcasting. You know what competition you're gonna have in general. So we kind of free flow and figure it out. But in your bio, it mentions that you've done like 1,500 homes and like $500 million in projects. What's that timeline? Is like last 10 years, 15 years, 5 years?
That part would be over the last 10 years.
Last 10 years. Have you seen over the last 10 years? What have you seen in the marketplace since you have that experience level doing a lot of bigger projects over the last 10 years? Because that's $50 million a year. You know, that's a lot of leverage. It's a lot of effort going out into the world producing.
Yeah, there's been a big evolution. In the 2011, 12, 13, 14, a lot of our focus was helping banks with distressed assets. They had foreclosed on so many things. And so, we were working with banks to help them work through those distressed assets. It was a ton of fun because it was complex. It was hard. And we did really well and made a lot of good partnerships as a result of that. Well, that started working through, and in 13, 14, 15, there wasn't so much of that to work on. And so then we started doing some rehab, apartment complexes, office rehab, some of that, because that's where we saw the opportunity. But everything evolves. COVID, not something any of us, could have predicted or planned for. And, I can remember that kicking in, and we all hunker down and say, okay, let's look at this. If every deal we have in the pipeline falls apart, how long can we stay in business, and how do we keep our people employed? And so we pivoted pretty quick on creating a plan to be able to navigate that. Well, it took us about a month to figure out that all of our worst case scenarios weren't going to happen. And we had the opposite problem. At that time, a lot of my energy was invested. We had a professional equestrian team that would travel all over the United States for equestrian shows. We also, a lot of real estate and construction. Well, the equestrian was considered ag, so that was exempt from any COVID rule, and construction was exempt. So our life didn't change very much, and it actually got busier because now people had discretionary income to be able to buy professional jumping horses because they weren't spending it on other things. And construction, well, people are bored and they wanted bigger houses and they wanted bigger apartments. And so all of a sudden we took off, and that was really fun for a short period of time. Well, now today it's, nobody has discretionary income. We've had, our average is 5.21% inflation for the last 3 years. And, people haven't seen a 15% increase in their wages. So now they have less discretionary income. And so, now we're seeing that, people are buying less house than they would. They're buying less toys than they would, which is affecting everything. And so, I think the big thing is you just have to stay really agile and be ready to pivot really quickly when the market does.
Yeah, that is a great answer. That's a great answer. I didn't realize construction picked up and equestrian picked up during COVID. I think it's very centric to you.
Yeah, I've got to say, it's not. We weren't that smart. It wasn't like, hey, let's get more into equestrian because COVID's going to come and we'll be exempt. And, we weren't that smart. We were just really fortunate to be in businesses that, we were able to really take advantage of the market.
It's the smartest people are just in the right place. Not that they did it on purpose.
Yeah. Interesting. We've got a small cattle operation, and, I'm in that business because I love it. It's fun. It's just something I enjoy being part of. Well, cattle prices, as an example, a feeder calf, was selling, that's a calf that's about 6 months old that you're going to grow into processing. We were buying those for $1.40 a pound 3 years ago. Today, I can sell them for $3.50 to $4 a pound for that exact same calf. And so it's the, the circumstances, the economy you're in. And so you adjust. And so using that as an example, 3 years ago it was, let's take these cows up to processing date and we sell the meat. Well, now it's let's take them to 6 months and sell those things because I can make a lot more money selling 6-month-old calves than I can selling a 2-year-old cow.
Wow. Okay, let's talk about cattle operation. We own some cows, but we're not like in the business of cows. So how many cows do you own?
Right now we've got about 60 head.
Okay.
So we're a pretty small operation.
Okay. I'm negotiating a deal right now. I'm trying to get 10 free cows.
10 free cows?
Yeah. We when we buy deals, we try and negotiate for whatever's there. So like, there's cows on property. Da 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 da. Do they come with the deal? Well, yeah. Okay. All right. I'm getting free cows then.
Yeah. And that's the thing is cows are worth some money. Different cows are. We don't want to bore everybody that's here for real estate learning about cows, but
I like it.
A dairy steer is worth significantly less than a beef steer. Okay. Because the meat quality is so different. And so, depending on what you're getting, but 10 cows are worth something.
Absolutely. They're worth something. They're worth something to somebody.
Yeah. Your worst case scenario, a cow's going to be worth, worst case scenario, you're going to be $1.50. And that's if you're getting the worst thing possible. Well, $1.50 a pound, if it's a 1,200 pound cow, well, that's $1,800 times $10. That's $18,000. I wouldn't turn away 18 grand. And that's your worst case scenario.
And I'm glad I was doing my math right. Cause I was thinking of like 1,500, $2,000 a cow. And that's kind of where I was at. So I'm like, hey, if anything, we get some free ribeyes.
Yeah. If it's a lousy cow, you don't want those ribeyes. Send it to the auction and go buy a good one. But if they're good cows, what color are they?
Oh, I don't even know. I don't even live there. I was going to send my partner to go check it out because it's all in the negotiation. So we're
sometimes if you can tell me what the color of the cow is, I could tell you what breed it is.
Oh yeah, well, like I said, I know the value of them, and if I get it for free, it's still a win.
Absolutely, if you get them for free, your worst case scenario is like you said, at 1,500. Well, that's 15 grand. On the flip side, they might be worth 4,000 or 5,000 a piece.
Woo. There you go. That's interesting. Thanks for the little segment way into cows. I appreciate it because, like I said, I'm looking to get some cows, and we already own a couple, so it's just a little side conversation.
I think it's a lot of fun.
I think it's been a great episode. Where can people find you online? I have Centra Capital Partners, and I appreciate you coming on and just sharing information. Is there any other places people else you can find you?
Yeah, LinkedIn, Dale R. Willms. Centra Companies.com, and then the investment arm is CentraCapitalPartners.com, which are all great places to contact us. We love helping people, and our goal is to help everybody build wealth with us.
I do have one last question. What is a quote that is yours or somebody else's that you resonate with?
Whoa, that's a great question. I really love our motto as a company. We improve everything we touch.
Yeah, that's good. Nah, I think we'll leave it with that. Thanks for coming on, Dale. For everybody here, go like, share, subscribe. Go check them out. CentraCapitalPartners.com. We appreciate you coming on, and we'll see you on the next episode.
It's been great. Thanks for.
Hey guys, we hope you're enjoying this content. If you have leads that you need to dispo anywhere in the country, please visit hivebc.io, like hivebuyersclub.io, and we'll help you move those deals that you need to get into the marketplace.